Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for September 27th, 2016. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. This morning so far, what you see is we have a tail up here as high as 54s, and prices have come right back down and are currently holding right at 21.44 half. Again, 21.44 has been the key pivot we've been watching here. I mentioned yesterday, especially in the trading room, if prices couldn't hold above that level, we would likely come down and hit that FOMC level at 21.35 quarter, which we've hit already this morning. Again, we're right at the center of a larger range here where we've had a lot of activity in the upper half of the range. We've had a little bit in the lower half, and right now we're just chopping around the middle. We could see more development of this nature before we see a major breakout opportunity come. But one thing that I am very conscious of is this very narrow range getting a break to the downside. And then when price comes up here, right into the center of that range, it's immediately rejected. Typically speaking, when you start to see these rounded off tops, when you start to see all pullbacks rejected hard, that's usually ahead of the next major sell-off. So one thing to keep in mind is if price can't get back above 21.54, 21.58, we could be staring at another move right into value, composite value, which would be 20.5375. So one thing we got to continue to watch is how does price respond to 54 to 58 half, and can price hold above 44s? If not, we could be looking at a serious decline ahead. All right, let's take a look at the intraday time frame. Here's an intraday time frame right here. One thing again, the previous session was a downtrending session for most of the day. Nothing really to say other than it was trending mostly down. We were looking for a move ultimately into 21.35. We got that this morning. Here's the impulse move low, a big rally up, double tops right here on 21.54, and then a big move down. So right now we do have an impulse range that you could use here to begin the day. 21.33 half up to 21.54. You got that midpoint, and now you can work off of that key zone. This range is pretty wide and pretty aggressive, so we could see development in that range now. Obviously, the key level to watch here is 54 and as high as 58 half. Any failure to get above that zone, again, on a swing basis, implies a move back toward 2055s, which is much, much lower here. All right, let's take a look here at the higher time frame. Okay, here we are. Let's take a look at crude oil. Here's crude oil, continues to coil up within the apex of that triangle pattern. One thing we've been talking about here was that we could see false breakouts into either edge. You know, a move down, then snap up, then a move up, then snap down. And that's kind of what we've been seeing here back and forth. We could see further development. We're just right in the middle of that range. It's getting really crunchy. Tomorrow we have tentatively scheduled is an OPEC meeting in addition to more Fed speakers. We have Janet Yellen and crude oil inventories. That's Wednesday. So we have a very crude oil heavy potential day tomorrow, and we could see further chop in this area. But once we see expansion, we know it could be big, but right now we got to be very patient and wait for the expansion to start to occur. On an intraday basis, so far this morning, prices rallied up. It found a high right here, and that's 45.96, and ever since it's been downward trending. Took VWAP offered, defended it on 2 rotations. The recent rotation came within a tick or so of being defended as well. So right now we have a downtrending market. I think any pop into VWAP likely to be a selling opportunity for a potential trending move lower. But for the most part, whenever we do find support, you're likely going to snap back and go the opposite way. So right now we do have a range developing in crude. 45 continues to be a key level. I think we probably trend downward until we hit some sort of rejection point. This is the previous session's close. Here's an LVN, so we probably can drop into that zone and perhaps bounce up. We'll see how that plays out. But overall, we got to be patient about crude oil on a higher time frame basis and look for short-term opportunities on the intraday time frame. Okay, let's take a look at gold now. Here's a look at gold futures. Here's a daily time frame. This has the weekly PivotBoss pivots on there. And again, one thing we talked about yesterday, this thing's in a holding pattern right now. just 1, 2, 3 days, now 4, developing in this very tightly coiled pattern here. This is after the recent move up. These rotations are finding lower and lower highs here on the top end. Support has been very clear off of 1306. We're still trading in this range. So 1306 to 1352 or 1360 is still the trading range, and even wider. And right now we're at the center of that range. Very difficult to engage in this market at this time, but we do have a tightly coiled price pattern here. And I would say a breakout from this 3 to 4 day range here could be very, very nice for a short-term momentum move. But if we do break down first, you got to be very careful that that is not a misdirection and a whipsaw opportunity for the opposite way. So just be careful on the actual breakout, on the initial breakout move. But once we do see expansion from this tightly coiled multiple day range, it could be significant, at least short term. Okay, let's take a look here at the NQ. On a daily time frame here, what we see, again, we have a nice impulse move that developed here. The recent high took us right into the 25% expansion of that impulse range. Very nice. And since then, we've dropped and closed back below it. And then this morning, you can see price came into it. Again, that's that 39 quarter, and rejected. That's also right where the pivot range is for the week. So price went offered off the previous close, dropped down, pulled back, and offered off of the top of the impulse range and the pivot range. That is typically a bearish formation. Remember, if price can't hold above 48.40, you likely drop back down. You have the center of the range right here at 47.32. And you have further downside key levels like this 47.58, which is an MCV POC. You have the outer edge of the range, which is 46.25. So right now, that little Q right here, failing to hold above this high right there, going offered back below it on this day, and now retesting it right here. That's the absorption portion. That's where bears want to defend is 48.40 and above. First shot at seeing a move back toward 47.32 or perhaps even lower. So if we look at that on an intraday time frame now, bring it out this way, 48.40 is right here, and you can see how price rallied right into it, pulled back, rallied above it, tried to hold for a few ticks here, a few rotations, and then right there the stops came out, right? So that's the 48.40 right there. That's the key level that the market needs to hold above, 39 quarter. It tried and it failed. So that's what I mentioned right now. If price rotates again back to this area, this is where zone, where bears want to continue to defend rotations for an attempt at pushing this thing downward. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.